Here on our news at Times tabloid, it says here's the first US nationally chartered bank to support XRP deposits. Right? Imagine opening your standard mobile banking app on a payday morning. You see your monthly salary hit your checking account right next to your savings goal tracker, your credit card statement, and a direct button to buy XRP. No separate crypto exchanges, no complicated wallet addresses, no wiring funds to third-party platforms. Just your regular federally regulated bank account treating XRP the exact same way it treats the US dollar. This isn't a hypothetical vision for the distant future. This is exactly what just happened as we close out May 2026. A massive nationally chartered US banking giant has officially opened its digital vaults to XRP deposits. We are witnessing a massive structural shift where the wall between crypto and traditional finance isn't just cracking, it's completely coming down. For years, the loudest critics kept insisting that a traditional, federally regulated American bank would never touch this asset. Yet, here we are. This development represents a monumental milestone that changes the entire playbook for retail adoption. We need to break down the mechanics of this banking integration, look at the commentary from the community, and understand why this completely shifts the baseline value proposition for the ecosystem moving forward. Alright? So, how is a nationally chartered bank changing the entire game? The fintech and banking giant SoFi has formally become the first nationally chartered US bank to support XRP deposits on its platform. This means that its massive base of 13 million customers can now seamlessly buy, sell, hold, and deposit XRP right alongside their traditional checking and savings account. SoFi currently features a highly curated list of 27 digital assets, including market leaders like Bitcoin, Ethereum, and Solana. Now, XRP sits firmly on that roster, fully accessible to everyday banking clients. This is a total paradigm shift for how the average person interacts with digital assets. When people have to download the separate crypto native app, link their bank accounts manually, and pass complex security verifications just to buy an asset, a massive percentage of the population simply gives up. It's too much friction. But when you place XRP directly in front of 13 million users who are already using the app for their everyday finances, mortgages, and direct deposits, you eliminate the barrier to entry entirely. So to me, this is how true mainstream adoption occurs, not through complicated decentralized applications that only tech-savvy traders understand, but through familiar, trusting banking users' interfaces that your everyday consumer uses to manage their monthly salary. So, why is the crypto community calling this a threshold moment? Alright, as soon as this news hit the wires, prominent crypto commentator Saif took to X to highlight the sheer magnitude of what just occurred. In a viral post, Saif pointed out that 13 million banking customers can now manage their XRP in the exact same application that receives their hard-earned salaries. Saif here heavily emphasized that this is the precise type of institutional adoption that traditional market skeptics repeatedly claimed would never happen. According to Saif, traditional finance has officially opened its doors, crossing a major threshold that the community has eagerly anticipated for a long time. I completely agree with the sentiment circulating on social media. The traditional financial world has spent years keeping digital assets at arm's length due to the regulatory fears and institutional skepticism. For a federally chartered bank to fully integrate XRP deposits, their legal and compliance departments had to thoroughly vet the asset and clear it for mainstream integration. This isn't a small, unregulated offshore exchange listing a token for quick trading volume. This is an elite, heavily scrutinized American banking institution signaling immense operational confidence. This validation completely dismantles the old narrative that utility tokens have no place in a regulated banking environment. So, how does removing friction accelerate long-term growth metrics? Right? The core value proposition behind XRP has always been rooted in its supreme technical utility. Right? Specifically, its ability to act as an incredibly fast, ultra-low-cost bridge asset for global payments and financial infrastructure. So, let's highlight this part. While Ripple has spent years forging enterprise relationships behind the scenes, this integration focuses heavily on the consumer side. Presenting XRP within a standard banking ecosystem, the asset becomes immediately accessible without requiring prior cryptocurrency experience or a separate financial onboarding process. So in my view, accessibility is the ultimate driver of a sustained asset demand. Think about how the average retailer behaves. They don't want to manage private keys, worry about hardware wallets, or wonder if an unregulated trading platform is going to freeze their funds. They want convenience and security. When a national bank provides a familiar interface to its established user base, it turns XRP into a normalized financial asset rather than an intimidating alternative experiment. This structural evolution directly influences long-term liquidity and introduces a steady stream of conservative capital that previously would have never touched the digital asset ecosystem. Now, what does this move signal for the future of US banking? Mainstream adoption has historically faced three major hurdles: the lack of clear regulatory frameworks, a severe deficit of institutional trust, and poor platform design for the general public. While the industry has consistently pointed to banking integration as the final boss of asset maturity, SoFi's operational pivot addresses all three barriers simultaneously. It signals a quiet but profound shift in how U.S. national banks view the legitimacy and compliance profiles of established digital assets. I believe this is just the first domino to fall in a massive wave of competitive banking integrations. The banking industry is notoriously cutthroat. Once one major player offers a highly demanded asset feature to capture market share, rival institutions are forced to adopt or risk losing clients. If 13 million users now have the luxury of managing their digital assets and traditional payroll under one roof, other major fintech apps and national banks will be heavily incentivized to follow suit. This integration provides the exact type of real-world infrastructural validation that long-term supporters have consistently cited as a prerequisite for true market maturity. Right? So overall, the arrival of XRP on a nationally chartered US banking platform is a definitive turning point for the entire digital asset landscape. It marks a fundamental transition away from the Wild West era of speculative retail trading exchanges and moves the asset directly into the heart of compliant, regulated American wealth management. By merging daily salaries with digital asset custody, the traditional financial system is acknowledging that utility-driven assets are a permanent fixture of modern banking infrastructure. So, my absolute final takeaway here is that the line between crypto and money is blurring faster than anyone anticipated. We are moving out of the phase where digital assets are viewed as speculative internet tokens and entering an era where they are treated as standard financial choices for the average family. The fact that an American national bank has opened its doors means the foundational infrastructure is finally ready for the masses. Pay very close attention to how user engagement metrics grow over the coming quarters, because the moment the average public can access an asset with a single tap, the entire game changes permanently. So keep your focus on the big structural shifts, track how these major institutions deploy their services, and remember that real adoption is built on real infrastructure. And this finally ends our video. Thank you very much for watching, and you might as well want to check this recommended or suggested video right here.